All right, friends, I'm Stu Galvis and I sell houses, and this is your May 2026 market snapshot for the Boulder and Denver metros. And here's this month's top headline. Both markets are active and both markets are selective. It's definitely a spring market, but it's not a free-for-all. And I want to start with a quick vibe check because the vibe is where people get tricked. Spring is doing what spring does. More movement, more urgency, and more should we just do this now energy. But here's the part most headlines miss. The market's moving again, but strategy still matters. So today, I'm going to give you the plain English read of what the numbers are saying, what I'm seeing in real time, and then I'm going to give you the simple plays, whether you're buying or selling. But first, let's check the scoreboard. I'm not going to read every stat. You can find those in the description down below. But I want to call out a few key tells. And here are the key points for the Boulder Metro. First, new supply is down hard, with new listings in Boulder down 17.4% from this time last year. Second, inventory is already lean, with total homes for sale down just about 12% over last year. And third, demand has crept up, with sales actually up just over 4% from this time last year. But here's the part that matters for pricing. Sold price as a percentage of list price. It's up. So while the median price in April was down almost 5% year over year, it's the combination of the three prior points that's most important, and I'll translate what that really means here in a second. Now, for the key tells in Denver, new listings are actually down 5.3% year over year. Not as dramatic as Boulder, but still down. Total homes for sale, however, are up about 5%, but under contract is up a little more than that, so that's a clear forward-looking demand signal. List price to sale price ratio is up, but median days on market is also up. So Denver is still moving, but it's less automatic. Now, let's translate without the hype. First, supply is constrained, especially in Boulder when new listings drop like they did in Boulder. That's a meaningful pullback. Fewer fresh options keeps the market tighter than buyers expect, and when buyers are being picky, you can have a market where people feel like they have leverage, yet the best homes still disappear immediately because leverage isn't evenly distributed. There's no the market. It's all micro markets based on demand for the area. Second, demand didn't disappear. It's just gotten more selective. Boulder closed sales are up, Denver closed sales are flat, but the under contract is up in both markets, which tells us that buyers are still writing. And what changed isn't that buyers vanished, they're just acting like buyers again. They're comparing, they're hesitating, they're negotiating, and they're walking away faster when a home feels overpriced or underprepped. That's not doom, it's just the normal market, and it's like that everywhere. But there are micro markets wherein all the best homes are still contested and in bidding wars, and it's usually those in the lower 40% below the median price for any given market. Third, pricing power exists, but only for the listings that earn it, and this is a big one. In Boulder, median price is actually down year over year, but sold price to list price ratio is up. So what that tells us is that the well-priced homes are getting paid and overpriced homes are getting negotiated. But in Denver, sold to list price ratio is basically flat. So it's the same message, but a different tempo. And here's the simplest way to think about it. It's a split market. The best homes move fast and the rest sit and become negotiable. So if you're selling, I want you to tattoo this into your brain. Accuracy gets rewarded and overreach gets punished. This is the season when sellers get tempted into the, hey, 80% is enough when preparing homes for sale. But it isn't. Listings get strong offers are not the ones doing the minimum. They're the ones that dial in the price, the prep, and the launch. And here's the pro tip that matters more than anything else. Your first 7 to 10 days are everything because new plus priced right plus presented well gets rewarded. And if you miss the mark, you're negotiating from a weaker position. So if you're thinking about listing, the question isn't, is the market good? The question is, are you ready to be positioned as the shiny penny in your micro market? Now, if you're buying, here's the mindset shift. Either be prepared to win what you want or start shopping for leverage, because both are valid strategies. What doesn't work is being underprepared or undercommitted and trying to win the best house. The best homes still move fast, really fast, but leverage exists on the listings that sit, have friction, or were overpriced for a market that's not here anymore. So buyers need to pick 1 or 2 gears right now. First, speed and preparation to win the best listings. You got to know exactly what it's going to take in terms of price, terms, timeline to meet a seller's asks before the right home hits the market. That means your financing is dialed, all decision makers are aligned, and your must-haves are crystal clear. So you're not trying to figure it out in the driveway or at the showing. If you're not committed enough or prepared enough or just don't want to win the shiny pennies, then the second gear is where you work to leverage the listings that have friction. These are the ones on which you can negotiate and where you can structure terms, where you find value. And one more truth bomb. A strong offer isn't automatically the highest price, especially on those. It's the one that matches the micro market and the seller's priorities. Net, timeline, certainty, stress. So buyers, here's the reality check. To win the shiny penny right now, the success formula often includes going well over the asking price, limiting or waiving inspections, and waiving appraisals or having extreme gap protection in your appraisals. So what's the punchline for May? It's a spring market, but it requires strategy on either side of the transaction. It's not a free-for-all. Both markets, again, very active. Both markets, again, selective. And the winners are the people who match their strategy to the micro market. So if you want a real plan, reply with May down in the comments and tell me whether you're a buyer, seller, or both, and if you're in the Boulder Metro or the Denver Metro. And I can send you a one-page game plan for this market right now. Or if you want to talk it through, grab a free 20-minute strategy session at stugalvis.com/schedule. And if you found anything in this video to be helpful or useful, please like it, share it with someone you know, and subscribe to the channel. Again, I'm Stu Galvis and I sell houses. Smart strategy, no hype. Let's make it happen.